This is Taking Stock on Bloomberg. I'm Pimm Fox. My guest is Christian Thwaites. He is the president of Sentinel Investments. All right, if you think the market is going to get clobbered, or you have to assume a defensive position, how should you position your portfolio? What kind of companies do we want to look at? I know you want to talk about a defense contractor, and this is L3 Communications. Why L3?
Well, L3, generally we like companies with strong balance sheets, good dividends, good dividend cover, a history of good earnings growth, and in this case particularly a very long order book, and an order book which is highly visible and goes out 5 to 7 years. So L3 is really the black ops of defense contracting, security systems,
intelligence
systems. A lot of it's highly secret and sort of not really known to most of the consumer, and defense generally has been an unloved sector. But this is a company.
I mean, the stock is up maybe 1% so far this year, 1.5%.
Yeah, but this is the time to sort of buy into that. You would not know from its earnings per share, which are going to be up about 7% this year, that there had been a recession. It just simply hasn't shown up. About 2 weeks ago, the board declared a dividend increase. This is a company which has increased its dividend 35% compound over the last 5 years. It's barely moved, but it's got a very steady, very highly visible group of earnings and incredibly high margins. It's in the surveillance systems area side of it, and we really like the stock. It's got a history of repurchasing its own stock, committed management, and
buy it around $75 a share. I mean, you talked about the dividend. They just moved the dividend from 35 cents a share up to 40 cents a share per quarter.
Yeah, and that'll be payable in December. It goes ex about 2 weeks' time.
How important is dividend right now when you're selecting a stock?
Very. I mean, to us, reinvested dividends typically over the very long term have been 30–40% of the S&P gains. Now sometimes that can get way out of whack, in a big market spike. But dividends, is real cash in hand, taxed at reasonable rates, and with a history of increasing the dividend. You're looking at something which, a few years out on your book value could be yielding, about 2 or 3 times what government bonds are yielding. So that having that cash in hand, we think, is going to be a very important part of total return for the next year or so.
All right, let's segue to a software company. We can use the security theme to kind of talk about Checkpoint, but they don't pay a dividend. Why do you like Checkpoint? You just like the sort of recurring revenue stream that they get from contracts?
Recurring revenue. So what they're doing is more systems and business security networking. And it isn't these sort of, like WebSense, and these sort of ugly screen poppers that come up every time you're sort of on the web at work. They're really sort of putting in strict data control systems, for enterprise-wide companies. And this is an area which most enterprises are not willing to sort of really to cut back on expenditure. And the contracts are multi-year. They did a very smart acquisition they completed earlier this year of Nokia's business, so that opened up, more of their addressable market. This is another company which, a bit like L3, you can buy it on 11 times earnings. It's sitting on $1 billion worth of cash. It's a $6 billion market cap.
There's that cash again. That seems to be a theme throughout your investing strategy.
We like strong balance sheets, companies that don't have to go to the capital markets, and whether they use it to repurchase stock, which is kind of in lieu of dividends, which is a kind of a reasonable strategy for a company like this. Or whether they use it for an acquisition. They've proven that they've got good acquisition track record. And I think if they do an acquisition in the U.S., they the last time they tried to do this, they ran into that Dubai Ports Authority type of concern. But I think in today's environment, that's going to be much less of a concern. So they could be a buyer, and a good strategic buyer. And the technology is really cutting edge. Makes it very simple to use with these drop-in blades that they put literally right into the mainframe computer.
Into the servers, into the actual boxes. Talk, if you can, a little bit about technology, because that connects maybe L3 and Checkpoint. Do you see that technology is going to be a much better performer generally in the market?
I think technology is too many different subsets to make that generalization. I mean, software, some software, enterprise software is kind of what we like, and obviously here it's kind of systems and control. But I think large parts of the tech sector, in the large cap space, are going to be more consumer-led. What is interesting and came out of the Intel results is there's a replacement cycle coming up.
Right, all that destocking and now means restocking.
Right, and so they talked about 60% margins. It's the kind of margins that Check Point has, and so for those types of companies, I think there'll be quite an outlook. But you've got quite a good outlook. But and some of the semiconductors have done well this year. But there'll be large parts of the tech which are going to be, Apple and Google obviously being the biggest ones, which are going to be quite prone to being sold off if they disappoint in the slightest.
All right. Well, Christian Thwaites, your defensiveness is duly noted. We'll have to see what happens to the market. Also, note what happens to U.S. Treasuries. Yes. We know that you're a little bullish there. We're going to watch and wait and see what happens with the equity market rally. Look forward to having you back. As always, a pleasure. Thank you.